Good afternoon, everybody. Welcome. Welcome to the market close. This is a good one. This is the Nvidia earnings day. We always have a lot of fun with those, so we'll be peeking in on them throughout the show, particularly after the bell, because that's when they release their earnings, and we'll see what's going to happen. Are they going to the moon, or are they maybe going to crash and burn? We'll see. We'll see. I'm predicting they're going to the moon. Well, maybe not the moon, but I'm predicting positivity on this, and I do have a swing trade involved in it. The channel members know all about it because that's a new feature of channel membership. Channel members are going to get some of my swing action, some of my swings. So my bigger swings, I'm going to post those up for the channel members so they can see them. And usually, I'm going to put them up before they finish. So not like oh, by the way, I did this big swing yesterday. It was great. No, I'm going to, like I posted it this morning to let them know the position I opened in Nvidia for tonight. So we're going to see what happens. Now, and we'll point out, if things go sour, I always have a backup plan. So with Nvidia, these are shares that can sit there for a while if they need to. So I'm not worried. I'm not worried. I mean, if they went down, they always come back. So it's kind of one of those no-lose scenarios. The only way you could lose is if they go down and you got all full of fear and said, "Oh no," and then sold. Well, that's not going to happen. So it's going to be a good day. It's going to be a good day. Of course, we got the bell. All of that coming up. This is bank week, guys. We got all the banks dropping their earnings, and they're looking pretty darn good. So as you guys know, every quarter I do my bank review video. So that'll be coming out next week. Once we have all the earnings this week, I'll get that one out. Basically, next week is going to be 2 videos: the 0 to 100K update and the bank one. So yeah, you can look forward to that. Because of the timely nature of the bank, I will probably do the bank for Tuesday's video, because normally the first video of the month is the 0 to 100K, but in this one case, I'm going to put the bank in front of it, and then we'll do the 0 to 100K for next Friday. So it's going to be good. It's going to be good. All right, guys, before we get to the chat, let's very quickly take a look at the charts. So here we go. Here comes up our little charty-warty thing. And we have a green day. I just realized I have white behind me. What's up with that? All right, just a second here. See if I can turn that green. Oh, there we go. Now we got a green day. So that was pretty quick. I should have done that while I was big screen because it's kind of cool. Anyway, green day on the market. TSX right now is up 0.39%. We're in pretty much all-time high territories. Well, technically not. Technically, we wicked up a little bit higher in the last hour. But if you want to take a look here, that blue line. I have to do this to get to the blue line. So we are having a fantastic month. August is a very green month. And I'll admit, I was wrong. Coming into August, I thought it was going to be green. I didn't think it was going to be this green. This is absolutely a stronger market this month than I was anticipating for August. But yeah, definitely green for it would take a black swan event at this point to get us out of a green month. So I'm calling August already. I'm calling it green. I'm calling it green. The S&P 500 south of the border also having a pretty good day, up 0.29%. Also, this one a lot closer to the blue, a lot closer to our blue line. Those of you who are new, by the way, the blue line is where we entered the month. So I drop it on the chart so that way there we know if we're having a good month or a bad month. In this case, we're having a good month with the S&P 500 and the NASDAQ. The NASDAQ also having a green day, up 0.8%. They are also above that blue line. So that's not too shabby. And we're going to be paying attention because whatever happens with these Nvidia earnings tends to have a pretty big ripple effect through the NASDAQ. We may not see that ripple today, but we'll see that ripple tomorrow. So that's kind of one of those things to pay attention to. Dow Jones also up, and there's the blue line way down there, up 0.42%, having a good day. And the Russell, all of those baby stocks, look at that, well above the blue line, also having a good day, up 0.60%. Gold is up slightly. Silver is down slightly. All of that fun. WTI having a pretty good day. Oil is up 1.16%. Bitcoin is up. Ethereum just a little. And oh, here's the superstar of the day. Nvidia sitting here. So right now on the day, they're down 0.18%. But we're not worried about what they're doing now. We're going to be looking at what they're doing in the after hours. So in the after hours, that's where the real game is. That's where today's game will be for sure. So coming up soon enough. We got about 9 minutes left until the bell. All right, heading over into the heat maps. We got, look at this, Royal Bank. Royal Bank had a pretty good earnings report, of course. And as you can see, 0.605%. They're up. Look at that. Not too shabby, in fact, if I come in here and click on their advanced chart, here we go. And we can see this is the Royal Bank day. It's like, there's that Royal Bank airplane heading up to the moon. It's great. It's great. They definitely had good. Here's their earnings right here. So you can see they exceeded their earnings per share by 15.84%. Holy cow. And revenue, they also beat by 5.81%. So not too shabby when it comes to the Royal Bank. All right, let's get out of the Royal Bank of Canada. But yeah, as you can see, pretty much leading the board over here today. Energy also having a good day. Oil's up. So, of course, CNQ is up. Suncor's up. Imperial Oil. They're all up. It's pretty good. It's pretty good for energy for sure. Now, there are a few surprises. So let's pull up here National Bank. I'm going to pull National Bank over here. National Bank, I don't see their earnings here. Their earnings weren't that bad. They had some pretty good profits in there, but investors did react kind of negatively towards them. And I'll tell you, when I was looking for swing trades this week, I almost considered National Bank. That would have been I'm sitting on them for a bit to wait for some recovery on that. So I'm kind of glad I didn't go with the National Bank, but I thought about it. I did think about it. Yeah. I'm glad I did not do that. Looking at the United States, not as many standouts. Yeah, there really isn't much for standouts. Everything is kind of mostly flat. I mean, even when you look at tech, like look at this, Nvidia down 0.24, Meta down 0.83, Microsoft up 0.91, Google up 0.37. If you were to add those four together, you almost hit zero. It's just not a great day. It's not a great day. All right, switching over to the world of cryptocurrency. Bitcoin having a good day. Ethereum kind of flat. XRP down quite a bit, 1.91%. Solana's having a good day, though. They're up almost 5%. There's a lot. There's so many crypto coins. In fact, there's about 15,000 plus altcoins. Now, Bitcoin's having a green day, so let's take a look at some random crap coin. I call it a crap coin because, well, I don't have a lot of faith in these little ones. Here's one. Bobacat. What the heck is a Bobacat? I know what a bobcat is, but Bobacat, is that Is it in reference to a bobcat, or is it that Bob's a cat? I don't know. Anyway, it's not worth much. It's worth a .4 of a penny. And well, looking at this chart, it's kind of got a little bit of a downward momentum when it comes to crap coins. And I call them crap coins because you don't know what you're going to get. It's kind of like going to the casino and throwing the craps. You know, those dice things. And you could throw the other type, but you'd probably get arrested. We'll leave that one alone. But yeah, they're a gamble. They tend to be a bit of a gamble. Not to say that they're all going to be a problem. It's just that you want to make sure, when I talk about doing your due diligence, do your due diligence and then do it again when it comes to some of these coins. Because I'll tell you, there's a high chance that you're going to lose money. A high chance. There's a lot of money to be made in crypto. It's usually not, though, with a crap coin. It's usually with the big coins, your Bitcoins, your Ethereum, your XRPs, your Solana, and heck, even your Dogecoin. So yeah, I would stick to them. In fact, I'm not a fan of penny stocks, but I would pick a penny stock over a crap coin any day of the week. Absolutely. All right. Whew. Let's get to the chat. Let's get to the chat here for a moment. See what you guys got going on. Jersky's first in the house with a quick old hello, good afternoon. Cece. Hello, Cece. Good to see you. SP is rising back up to the high. Nice. Let's see. Might crack it for close. And Jack saying moon time. Good afternoon. All right. Emirates says, I'm interested in NVHE. How do you think it will affect that? I think it will be fine. So yeah, so NVHE. So that there is, it's basically, well, you know, they're holding Nvidia and writing cover calls, and I believe this is the one that has leverage as well. So if it explodes, if we get the to the moon situation, so yeah, you're going to experience a good day. You're going to have a good day with NVHE. But I'm putting the but in there, depending on how they wrote the covered calls on that, the strike prices they put in, there's a good chance as well you may not get the full moon trip. You might get a partial moon trip. So while people holding straight up Nvidia, or at least a version that's not using covered calls, they might get the full moon, but you'll get like a half moon or maybe a quarter moon, depending on the actual covered call. And like I said, where the strike prices are, where they're doing it. So yeah, you'll definitely have a good day. Now, if they go down, yeah, you'll fall a bit too. But once again, here's the thing, guys. Covered calls thrive on one thing, and that is volatility. So when things are going down or going up and moving a lot, that is where you can make bigger premiums when you're selling options on them. And as a result, that's more money coming into that fund, meaning that they can provide bigger dividends. So most times, when you look at a covered call ETF of any kind, if they're cutting the dividend, you want to know why they're cutting it's not because the price of the asset is going down. It's because more than likely the volatility has gone down. So that's kind of one of those things. So yeah, they thrive on volatility. All right. Got a follow up here from Amrit. Let's see here. What do you think of Meg Energy being purchased by Synovus? I see Synovus take a nice pump there. You think any opportunities there? I don't know how many opportunities there are going to be right now. Like if you're looking for a quick price gain or price move, it's over. That part's over. However, what this does mean is I think this is a really good move for Synovus. I think it makes them a stronger company. So I think long term, if you're looking for a long-term energy investment, if you jump into Synovus, I think you're going to be happy down the road for sure. So gotta say, I do like this move. And as we get more and more choppiness in the energy sector, we're going to see more moves like this happening. So you will see the bigger oil companies start to consolidate, and not consolidate amongst themselves, consolidate by buying up the little ones, bringing in the little ones, getting bigger as a result. You will see more of that. So this is going to be kind of a normal thing. So on the other side of this, it's kind of neat. We'll actually have less energy companies, but bigger energy companies, and new ones will of course start coming up and popping up again. And you will of course still get other energy companies of sorts that'll get spun out. So for example, something like South Bow recently was spun out of what was it, TRTC. So yeah, there's all kinds of things it's going to be, I think the next couple of years are going to be very interesting, without a doubt. Rory says, hello all, killed it on RBC today. I bet you did. Yeah, anybody holding RBC today, you're smiling. It's like, ooh, look at this. Well in the green. Absolutely. Cece, interesting that Nvidia has nothing to do with this late afternoon SP push. Yeah, I think right now, Nvidia right now is pretty much flat. They're pretty flat. Oh, and guys, this just reminded me, we got a bell. Let's do the bell. We're a minute late. I got distracted. All right, we'll check in on Nvidia in a moment, but this reminded me, if you guys remember, I did that new video on all those purpose funds. All those purpose ones. Well, guess what? They're live. They have all been released. So at the time of the video, and we're just talking like a week, Purpose had no idea. They just said, yeah, that's just a prospectus. We don't have, I'm sure they already had the release date, and I think they already knew they were being released. But yeah, those are all out and in the wild, as well, of course, as the harvest ones that we've been all excited about. So all of these new ETFs, they're out there, they're ready. Have any of you guys bought any? Well, I know a few of you have gotten into the HHIC, and I know a few of you have also bought the Shopify one. But I'm curious to know. How have you guys dabbled? Have you dabbled? Have you gone all in? What's going on with these new harvest ones and the purpose as well? All right, Cowboy says greetings all, and Jim is here. Awesome. Let's see. Roy says, was going to buy some HHIS today, but changed my mind. Will hold out for another covered call ETF. And Dan is in here. What's your opinion on Kronos? I have absolutely no opinion on Kronos. I am thinking from the name. This is the thing. This shows you I have no opinion. From that name, I'm thinking it's crypto. You know what? I kind of want to find out what it is. Let's take a look here. Google, I'm going to just type in Kronos first. We'll see. Oh boy, we'll see what comes up. There we go. Kronos and crypto tends to be a popular thing here. Let's see. Kronos crypto price prediction. Trump media buys 1 billion in it. Okay, that's interesting. I haven't really looked at Kronos. So, the fact that I just figured out it was crypto and that we just got this story here about Trump buying a whole bunch of it. It could be interesting, but at the same time, and Dan, you have to take it with a grain of salt, but it seems to me every time Trump buys some coin or something and everybody thinks it's going to go to the moon, it's like a whole bunch of people pile into it and then he sells. I've seen this type of thing. So I don't know if I would trust Kronos at this point based on that. I could be completely wrong, but I'd be careful. I would be careful. I wouldn't put more money in that than you more than likely could possibly lose. Just be careful. Trump does a few sketchy things around crypto. So if he's promoting one of the mainstream coins, yeah, it usually helps him. But some of these other coins, I'm I'm a little on the skeptical side, a lot on the cautious side. Jim says big rug pull coin. Yes. Kelly says, I'm a Cardano holder for a while now. It has been very much down or at the same since I've owned it. Now that it is the same as my purchase price, I get torn between selling and just forgetting about. All right. Yeah, Cardano. Cardano, everybody thought Cardano was going to be the big one. It really hasn't. I think a lot of, I'm going to say Solana. I think Solana changed a lot of kind of, let's say they changed the tide. They changed the tide of crypto a bit. And the reason Solana has made such a big impact is that when you think of gas fees in Ethereum being as expensive as they were, and as far as I know, they're still pretty expensive, Solana created another platform to build on that had a lot cheaper fees. So a lot of people sort of moved to Solana. And I think Cardano in that whole mix kind of sort of, I don't want to say they got forgotten about, but I think a lot of people have lost focus on them. I still think they're a good coin. I still think I think they're fine. I don't think they're going anywhere. But if you're looking to grow, you might want to sort of just look at the environment and see if perhaps there is another option. Or if you're happy holding out in Cardano, then there's nothing wrong with that either. I just don't think you're going to see any massive gains on it. Opposed to like Solana, I think Solana will do well. I think Bitcoin will continue to do well. Jack apparently thinks Litecoin is going to the moon. I'm not sure if I would completely go there, but I know at least one person who agrees with Jack. So, Zimayer says, "A economy can rely on a single company. This is insanity." Yeah. So when it comes to, and I believe that's pointed at Nvidia. Part of it with Nvidia is that because Nvidia is so intertwined in all of the big tech companies, and in the whole AI, if you want, some people call it a bubble, some people call it a fiasco, but they're entwined in that whole thing, and that is how they've managed to get into that position. Now, let's take our first little peek over here. Oh, I already have it up. All right, let's just get over here and take a look. So right now, they're sitting at 182.30. They closed at 181.60. So we got a little bit of movement to the upside, but these numbers, we do not have these numbers yet. In fact, before I get the numbers on my screen, you guys are normally already dropping them in the chat. So we're up a little bit, but right now, like I said, no relevant data has dropped yet. So we don't know what is going on yet, but it's a good start. It's a good start. All right. Now, I just need to, here we go. Up next, we got Mary. Mary is our official captain of the like button. So, guys, you don't want to get Mary glaring at you, so hit the like button. I'm gonna have some iced coffee while you guys are doing it. And in September, I'll be switching back to regular coffee. I don't know right away, but probably soon. This is good. Almost like if summer could just go a bit longer. We'll see. Rory says single stock ETFs, in my opinion, are quite dangerous. All right. I don't know. I'd like you to explain why that you think they're dangerous. I will say one thing. If you're looking for diversification, yeah, they're not the right choice, because you're getting that complete lack of diversification. You're putting all of your you're putting all of your money in one basket. It's a basket of one. So in that sense, I would say normal stock normal stocks diversification rules should apply. So if you don't like to be diversified in more than 5% of a single stock, then a single share ETF, you shouldn't have more than 5% of it. Simple as that. Now, yeah, you do lose a little bit of that upside potential with that stock. You're trading that for that income. And depending on the stock, if the stock's very volatile, it can certainly do well. But you are sacrificing diversification for sure. So I would be curious to know though, why else you think that they're dangerous? And we'll talk about that once I get a response from you. Let's see. Jim says, depending on how Nvidia's affects the market, it could be a good Q day. Yeah. No, if Nvidia has good earnings and investors are happy, because I'll tell you, there's more stuff. Like with Nvidia, it's not always like they can have a nice, they can exceed expectation on both earnings and revenue, and still fall. A lot of times, it's other things like that are going on within the company. So, like the whole Blackwell thing, that caused a little bit of an issue. And actually, somebody pointed out the other day that in 2025, their success record on these earning calls have not been great, and I agree, they haven't. They're due. That's what I'm gonna say. They're due for a good one. They're due for a good one, but we'll see. I think after this, we only have one more in the year, so last two not so great. Hopefully this one. I did put some money on it, so we'll see. Jordan is in the house. Hello, Jordan. Good to see you. Howdy there, Candace. Finally found some time to catch you live. Hope you are and have been doing well. I'm fantastic. It's I love. There's certain people that come in and it's like they make my day. I'm like, yeah, Jordan's one of those folks. It's like always good to see you. All right. Let's see here. All right, we're gonna zip over this. Bell time. Yes, I was 1 minute late to the bell. Holy banana bread. All right, let's see. I'll stick to the funds that don't stick to one industry. All right, and you see, yeah, and I guess that's going back to the thing with Rory saying dangerous. So one of the things, and let me go, I'm going to pull this one up as well. Jim is saying I'm looking at HHIC. So when we look, so let's look at these harvest high income shares. So you have, for the US, you have HHIS, which holds all of the US ones. So you do get tech, diversification, and well, not just tech, because not all of those companies are in tech, but most of them are. It's highly tech skewed, but you have Eli Lilly in there. Eli Lilly is not tech. They are, they're technically more health. I would put them within the health sector. So you have a little bit of exposure outside of tech, but it is heavily tech skewed. So yeah, in that case, that's kind of one of the interesting things. Now, when we switch gears and look at HHIC, so that there is the Canadian one. Well, they have better diversification because yeah, they've got the banks, but they've also got some tech. They've got some energy. They've got some consumer staples. They've got a little bit of everything, and that does give them better diversification right across the board. However, and I'll put this, HHIS is always going to have better dividends. And some people will say, because they get American companies. Well, not exactly. It's because they have that tech heavy. And tech is by nature, tech is a more volatile sector than pretty much any other sector. The volatility is normal for tech. So as a result, that's really good for covered calls. So they're able to get some pretty good returns, some pretty good yields off of those. And baking that all into HHIS, yeah, they're going to have the higher yields, no doubt about it. But at the same time, the HHIC, it will have that better stability. It'll have that better overall diversification, without a doubt. Jim says Kronos is the home planet of the Klingon Empire. Is that what it's called? Is it called? Yeah, I guess it is. And then their moon Praxis was destroyed from overmining. Okay. Let's see. You're not completely wrong. Trump is a crook, and his coins are a scam. Yeah. I was trying to say it in a more polite way, but that's what it kind of boils down to. Absolutely. Jersky says, I picked up 25 HHIC and 20 SHPE. So there we go. Some Shopify and then the mothership, the Canadian mothership. So I guess it's a giant canoe. But hey, why not? Rory says, I'm picking up HYLD on Friday or Tuesday. Nice, nice. I wanted to mention something about HYLD. So my last video, that return was a little high. So the total return on HYLD was a little high. So, I had a couple people in the comments who said, that's high. My values aren't anything like that. Absolutely. And I'll tell you why. Actually, I was about to go to the whiteboard. I don't need this. When I was doing the 1 year, basically at the beginning of the year, we had a trough. So it was just happened to be a day where the price had dropped a wee bit. So it kind of really knocked the starting price down. And the day I pulled it, on the other end, wouldn't you know it, we had a little bit of a peak. So the price was a little higher than normal. So that did inflate that number. So keep that in mind. And I was thinking to myself afterwards, I probably should have mentioned that when I was filming it. I didn't mention it. So I will say one other thing. You will see HYLD in another video very soon. When I say very soon, maybe it's going to be in Fridays. And this time there was no trough and there was no peak. So I think the Friday values much more representative. But always keep that in mind. All of the total returns that you see on my videos, they're a slice in time. And, the way the market works, a slice in time one day can look a lot different than a slice in time a week later, a month later. Sometimes it could even look different if you take that slice a couple of hours apart, depending on what the market is doing. So that's just something always to keep in mind. I just wanted to sort of touch on that very quickly. Emrit says, let's see, picked up 41 MSTE today, starting a small position and seeing how it goes. So a little bit bullish on the strategy. Now, strategy does have a pretty good amount of volatility. So that will definitely support the covered call side of that pretty well. CC says, Trump buying into all current market bubbles, almost like watching the ground crack under your seaside house. Yeah, there almost should be an inverse Trump ETF. I would buy that. One that basically bets against everything he touches. I would happily buy that. Even if it didn't work out, I would still just be happy knowing I had it. Cowboy. I picked up Q Day, C Day. The returns are okay so far. Okay, yeah, absolutely. And it is nice to see. Here's the big benefit of things like Q Day, C Day. So any of the day max, where you're getting dividends twice a month, if you're reinvesting them. So if you're at that point that you can reinvest them, that will really help those, grow really fast, especially if you put them into a drip. Those will grow really, really fast as you move along. So I am liking that. All right. Brian says Ethereum is going to be the base tech that that the new banking stock market is going to be built upon, which is why it's being heavily bought by institutions. Yeah. So when I mentioned, and we were talking earlier, I mentioned about the gas fees on Ethereum being high, and that a lot of developers have moved to Solana because it can be, you can build a lot of the same stuff on it with cheaper fees. But yeah, no, Ethereum is not going anywhere. Ethereum, as Brian's pointing out, yeah, Ethereum has a big role ahead of it. And you'll look, heck, what was it? It wasn't that long ago that I was saying, I think Ethereum's going to get above 4,000 one of these days. And right now it's sitting at 4,586. So Ethereum's having a pretty good year for sure. I don't know if it'll tell me. Let me just take a look here and see. Yeah, here it is. So yeah, year to date on Ethereum. And you guys may not be able to see this. If you're watching me on a TV, you can. But if you're watching me on your phone, probably not. But year to date on Ethereum, 37.59%. So that's pretty good. Bitcoin, year to date, only 20.15%. So yeah, Ethereum's having an absolutely good year. So I'm liking it. I'm liking it. All right, let's get back over here to Nvidia. Nvidia, we're still sitting. Not much is happening. Still sitting slightly above at 183.24 in the post hour. All right. Z Mayer says my cousin works at Nvidia. Let's just say don't count on it on the long run. Can't say anymore. Okay, fair enough. Well, here's the thing though. Right now, Nvidia, they kind of got I don't want to say monopoly, but they kind of got a monopoly on a whole bunch of the AI chip market. And there's other companies. They're making strides, and Nvidia is not going to hold on to it forever. If your cousin said that, yeah, your cousin's right in that aspect. But the whole thing is how long. Now, I will also say companies like AMD, they've been making a lot of headway in some of the non-AI stuff. So they've been improving their graphics, like their graphics GPUs, so graphical processing units. They've been improving them big time, and they're making a lot of inroads in some of the non-AI stuff. So, it's pretty good. Like a lot of the growth that we've seen this year in AMD has been them moving into some of those territories. So AMD is carving up what they can for now. And there's a lot. Like Apple wants to make its own AI chip. I think Microsoft wants to. I mean, there's a lot of companies that are like, if we could just make these in house. So yeah, AMD is not going to be, or sorry, AMD. So Nvidia, unless, and here's the unless they can keep improving their technology to a point that nobody can keep up with them. That's gonna be what's needed for them to continue running for years and years. So when is this race going to be over? Nobody knows, but just be sure there are people that are trying to take the crown from them, and more than likely it probably will happen. Nvidia will probably at some point they'll still be a top tier. I think they'll still be a top tier, but they may no longer, they may lose that crown at the top sooner than later, and not a quick sooner. It's kind of a longer sooner than later. Like you know what the better word would be? Midder than late. I guess that's not a word, but if it was, it would be midder than later. There we go. And Jim says AMD has their sights on Nvidia AI dominance. Well, yeah, exactly. That's what we're talking about. Okay. Jersky says, I'm waiting to add more to my C-Day, Q-Day, and S-Day ETFs. Nice. Bill's in the house and Bill says, I don't know about dangerous, but I'd like someone to point out a single stock ETF that outperforms the stock it's based on. That shouldn't happen. That, when I say it shouldn't happen, yeah, your normal stock. So obviously it depends on time frame, but if you're looking straight right now, all of these single share stocks, they've all been out during a bull market. So as a result, because of cap potential, they are not going to outperform. Now, even if you add in the dividends, even if you reinvest the dividends, you can get close, but you're not going to get there. So yeah, you will be beaten every time by the underlying asset. However, and there's a couple of howevers here. So one of the howevers is, what are you using the covered calls for? So if you want the income, so let's say you're living off of the income. So a lot of people in retirement, that's what they're doing. They've got all of their covered calls sitting in their TFSA, and it's just pumping out tax-free income, and they still got all of their supports, which is fantastic, and that's making their lives a lot better financially. So in those cases, they don't care. So they're at that point like, yeah, okay, so what? So what? I'm happy with the income coming out. And you could argue with them, and some people will. Some people will say, well, if you get a bigger total return, because from the actual asset, you could just sell a couple shares every so often and use that for your income instead. You'll still make more. Well, the one argument against that is what happens when we go into a bear market. So that's one of those things that we have to look at. So in a bear market or a flat market, all of a sudden the rules start to shift a little, because you still get the covered calls coming, provided we still have the volatility. I mean, if we had a flat market and volatility fell to nothing, you're going to see dividend cuts. No ands, ifs, buts. That's how it works. Although that normally doesn't happen. Normally we still have a good amount of volatility, especially with the stocks that are chosen for covered call ETFs. So yeah, you're going to be fine. But here's that thing. With those total returns, during the flat times, during the bear markets, during the down times, yeah, those will beat the underlying asset. However, with that being said, a bull market is much longer. Typically, if you look at averages across, since we've been looking at the market, the average bull market lasts about 5 times longer than the average than your average bear market. So from that, yeah, if you just hold a covered call ETF long term, so we're talking more than 3 years, we're talking like, let's just say 10 years, and you have that underlying stock as well, the underlying stock will win on that time frame, even though you might have a bear market in there where you're winning with the covered call. So yeah, it really boils down to, so covered calls for me, it's all about income. So, and knowing how to do it, knowing what you're doing, like most people who are going into retirement, that's kind of where they really become big time. Or you also have some younger people who are in the FIRE movement, and I look at this as an interesting. So FIRE, by the way, that means financial independence, retire early. So if that's your goal, you still probably are better off with total return stocks until you're ready to pull that retirement. Only because you want to maximize your growth. Now, and a total return stock, I want to sort of step back here. A total return stock can have a lot of dividends. There are some really good high dividend stocks that, to me, are still I would still classify them as hybrid stocks. In fact, if you watch Friday's video, channel members will be able to see this one tomorrow. The channel members voted. So you guys gave me ideas, and the channel members got to vote. And tomorrow, so Friday's video is going to be basically it's going to be your essential ETFs in a hybrid. So we're not talking, it's not a dividend growth portfolio, it's not an income portfolio, but it's both. So we're going to do that for Friday. I'm looking forward to it. It's going to be a lot of fun. Anyway, boy, Bill, you set me off on a tangent. There needs to be like a tangent award or something. So every time one of you guys sends me off on a tangent, you get a point. We'll see who the point leader is. Danielle says, hello all, bought HHIC and SHPE Monday and bought a little more of SHPE today because of the drop. Hope it is a good bet for the future. Love the income. Oh, there we go. I do like HHIC. And yeah, and Shopify, that's definitely some good income coming off of that one as well. But HHIC does have my my attention big time. Rory, see, dangerous might be a tad dramatic. I'd say it's a risk I personally won't take. Example, Elon Musk could do something really strange and the Tesla products go crazy. Yeah. That's exactly what can happen. So yeah, when you are, and that's why it all comes into diversification, right? So even if you're holding individual stocks, it's one of these things where you need to figure out how much you want to limit your exposure to any one company. Because yeah, if you're investing in Tesla, and this doesn't even have to be, doesn't even have to be covered calls. It can just be Tesla in general. And Elon decides to do, I don't know, some silly salute that people think is, might indicate one thing or another. Yeah, that could tank the stock a little bit. Now, normally it does bounce back, and Tesla has been very resilient that way. I think people expect these Elon moments, we'll call them. But yeah, let's take a different. Let's take a company that perhaps doesn't have any scandals. If all of a sudden the CEO was convicted of some horrible crime or something, or yeah, that could tank an entire stock. That's one of the reasons that, like for myself, I like to limit myself to a single company. I try to get to about 5%. Now, I don't get concerned if I go a little above 5, but 6 is kind of my cutoff on a single company. Now, my exception is if I'm investing in a company that holds a bunch of other companies. So, for example, Canoe EIT. Canoe EIT is an income fund. They invest in a whole bunch of companies in the energy financials. So for that reason, I don't mind going up as high as 10% with EIT. Same thing with a company like Brookfield Asset Management. Yeah, I'm okay with going up to 10% on that because they're holding, once again, a whole bunch of other companies. So that gives you kind of some built-in diversification there. All right. Zamer says, you want dangerous? Go for a triple leveraged ETF by Direxon or ProShares. Enjoy. Yes. I actually have a video on a Beta Pro. Beta Pro has a bunch of, most of them are 2x, but they do have 3x on like the on NASDAQ and the S&P 500. You can get 3x on those, both bear and bull. So yeah, those are fun. So yeah, if you're sitting home at night and you're like, I'd like a good scary movie, just watch that video. Watch that video and then imagine investing in them. And that might get your heart rate up. It might, or maybe not. You might live for the thrill. Some people do. Jay says, is S-Day ETF more riskier than HHIS in a bear market, being a 0-day to expiry? We haven't seen either of these in a bear market yet. However, keep in mind, volatility is a covered call's friend. Options loves volatility. So even if you've got a lot of volatility, even on a 0-day, I think they're going to be fine. Now keep in mind, and let's sort of define bear market. If we have, a mild bear market, covered calls will definitely be thriving, big time. But if you have a, almost record-breaking bear market with really big plunges, it can get a little bit harder to make money because, it's just that thing. You want volatility, but you don't want volatility off of the charts. So it's kind of one of those things. But keep in mind, in that type of a bear market, it doesn't matter what you're holding. Everything's going to be suffering. And the rule is don't panic sell. Unless a company gives you a very good reason, don't panic sell at all. It can get pretty hairy. So good example of that, 2008 financial crisis. You will not believe how many people I've heard of that panic sold during that. And yeah, that one looked pretty bad. But anybody who didn't panic sell and just held through it, they're okay. They're okay. But, the people who did panic sell took some incredible losses. All right. And Rory, yes, Rory is, you're known for your inverse oil. So HOD. All right. Get Rich is in the house. Hello, Candace. Great show. Thanks for all of your efforts. What's your thoughts on XRP? I I like XRP. XRP is, I think XRP should be doing better than it is, and I think it will. I think it will do better. I know in Canada we have a spot XRP ETF now. It'll be very interesting once they have spot XRP ETFs in the States and we start getting some of that US institutional money pulling into it. The banking system, of course, loves XRP. So I think XRP is a great coin. I've got nothing negative to say about it. And I know a friend of the channel, the Danters, they got a pretty big XRP play going. So I do like XRP. Zamer says, those are not only volatile, but actually fraudulent. They pocket money under the umbrella of rebalancing, been dragged to court a few times and settled. Oh, what, by Direxon and ProShares? Yeah, maybe. I don't know the full story. I will say, though, that the Beta Pro ones, they're pretty reputable. I don't think I've ever heard any issues with them. But they do. Any of these 2x, 3x, they do rebalance every day. It's a normal part of it. So they're not designed for long-term holding. So what you have to hold them for is pretty much day trading. Get in, get out, get in, get out. Not hold them forever, because they do cash out the leverage every single day, and they start with fresh leverage. So there can be some wonky stuff that happens to your money if you try holding them beyond a day or two, or so don't do that. Those are they're for day trading. They are absolutely for day trading. Can you short the Rex? I don't know. I'm not 100% sure what you're asking. DJTU, is that Donald J. Trump University? I don't know. CC, no cycles for ETH? What type of cycles are you talking about? All right. And it might be that I'm so far behind that I'm losing the relevance of where that where that's come in. So it's interesting. All right, I'm gonna try to move through these a little faster here. Jim, I sold my HMAX and got Q-Day. I get the same amount on distribution, but twice a month, so I'm pretty happy. That's not too shabby. I do like Q-Day. Cowboy, don't like drip. I prefer to use all dividends to buy the best dipped stock in my list. Yeah, that's what I do. I like that for sure. Nvidia spiking on the report. Well, over here on the side, guys, right now, oh boy, they are down a little bit. 176.10. So I don't like that. Come on, get back above there. Mary, oh guys, you have not been hitting the like button enough, because you got Mary. Mary's giving a glare at you all. So hit the like button. I'm going to have some coffee. You got time. And Rory does the same. Yeah, exactly. And then, nope, Nvidia dumping now. I know, I see it. Looks like my swing, I might be holding it for a bit. Hit it before coming into chat. Awesome. Zamer, let's see. The Chinese will catch up because they have to. So Nvidia is cooked in the long run. Yeah, there is China. China is absolutely moving forward as fast as they can. Yeah, I can definitely see that. Let's see. Nvidia dropping. Bullish for Google. Let's see. I still like some of the split shares. Nice dividends monthly. Yeah, I mean, it's some like that Brompton ETF, split share ETF. That's pretty interesting. And the returns on it have been pretty good. There are a few really good split cores out there. I probably need to do another split core video. It's been a while. All right. Jim says AMD has better CPUs than Intel, and they're taking Intel market share. Myself, I like their product cycles better than Intel. Plus, and uses a modular construction with their CPUs. All right. Yeah, Intel Yeah, Intel's kind of quiet. Like I hear a lot about Nvidia, a lot about AMD, and Intel just kind of is under the radar for the most part lately. Let's see. Nvidia beat all three metrics, but surprise is seen as small. We'll wait for guidance. That could do it. That could do it. And that's the thing with Nvidia. Sometimes investors are like, "Oh, you beat expectations. Oh, you didn't beat them by more than we wanted you to beat them by more than that." I have seen that. I have seen that for sure. Now, I've also seen, and I have seen this with Nvidia, where in this show, they finish on the downside, but then once they open in the morning, they pretty quickly regain everything they've lost. So we'll see. We'll see how this is all going to look out. PII is the new buzzword. I like it. Emirates. I'm just keeping the CC cover, the covered call ETF in my TFSA. I'm 32 years old. I thought I was getting some gain, and the divs are helping with multiplying the TFSA room. MSTE 0.55 is high, and I think Bitcoin will be okay. Yeah, that's the thing. I mean, when you're young, so 32, one of those things is a major goal. A major goal is growing that TFSA, making it bigger. Anytime you can make it bigger, that's kind of a good thing, because when you do get to retirement age, 40, it might be 40 years for you, Emery, by that time, you're going to be then looking to say, the bigger space you have in your TFSA, the more, when you switch to a more income-focused portfolio, the more tax-free income you can have just flowing out of it. You pretty much can turn it into a money printing machine for yourself. That to me is a good thing. That's a good way to enjoy retirement for sure. All right, Zimair, if you marry funds with their covered call fund, can you actually beat both if you balance it correctly? Something like a SPY plus SPYT in the US. You have to remember too, in a way that kind of already happens. So most covered call funds, a lot of them are writing on only about 33% of their holdings, although a lot of the new high income shares, I believe they're up to 50%. So you kind of have that. Like some of them are, some of it is sitting there without covered calls on it. Usually 50% to until maybe 66%. So you are kind of getting that in a lot of these funds. But, if you're trying to find a way to, to sort of beat that, once again, if you reinvest the dividends, you get really darn close. If you use them with leverage, you get even closer. But I mean, if your only goal is the growth, then you are better off with the underlying asset. That's just the math. And there are some people who will say, okay, in a bear market, I'll hold the cover call version, and in a bull market, I'll just hold the underlying asset. Or in the case of cover calls, actually a great way to look at it is when you look at Bitcoin spot ETFs. So one of the strategies that I tend to use and is like I will hold during bear market and flat markets. I tend to put a lot into BTCY. That there is that purpose Bitcoin yield because it's got the covered calls on it. The covered calls are bringing in income, and I got it sitting there. But once Bitcoin is coming out of its funk, I will usually abandon. So I will usually sell, usually at a profit. I will usually sell my BTCY, move that into maybe BTCC or. Right now, I got HTBE, which is kind of a Bitcoin leader. So they're investing in companies in addition to Bitcoin. So there's a lot of different things that I will definitely use, but it boils down to what it is, what your goal is, what you want to accomplish. Because keep in mind, some people don't care how much value something is losing because they're all about the income. All they care about is Is that dividend safe? Will that covered call keep doing it? Well, yeah, as long as the volatility is there, then you don't have anything to worry about. Which is, like I said, once again, it's one of the reasons that tech is such a great a great area to do covered calls on, because there's a lot of volatility in the technology sector right up front. All right, every so often I'm glancing over here to see Nvidia at 175.43 right now. Holy banana bread. Come on, Nvidia. Do something better for me. Al Jones says, I'm 77 and now have 90% of my TFSA in high income ETFs. If I make it to 80, I will sell everything and coast until I check into the crematorium. All right, fair enough. That's a plan. Yeah, I mean, it really boils down to, if you have that nice income right now, and here is a fact too, guys. So when you retire, you spend a lot more money, and the older you get, believe it or not, you don't spend as much. You just, I don't know if it's like you get to that point where it's just like, my bones are not feeling like moving today. But yeah, you tend to spend less. And you could argue, and some people will argue, like, oh yeah, but you have more medications, and well, usually a lot of those medications are usually covered, hopefully, but they may not be. But even then, there's a lot of things that you're just not doing. So kind of an interesting thing. But yeah, it's not a bad plan. The only problem with that, though, Al, is if you decide to coast to the crematorium, what if you happen to be that person who lives to 120? Will you be able to coast all that far? So, that's the only thing. I look at it this way, and I'll put this out there, Al. If you are in very good health right now at 77, and at 80, if you're still in very good health, I would maybe consider doing, instead of just taking it all out, selling everything and coasting, I would be more inclined to sort of almost treat it like an RRIF and take out a bit each year, like maybe what you need. Leave the rest making you money. Because if you take it all out, you're not going to spend it all right away. So leave your best performers continually to pump out money. Take what you want. For year 80, you're like, all right, I want to do this, I want to do that. Yeah, take the money out for that. But, if you sell everything, you'll have just a chunk of money sitting there doing nothing. So I would definitely think your better option is, of course, continue to let that money flow, but take what you need. Just take it as you need it. You might see, for example, if the market all of a sudden has a day, like a really good green day, that's probably a good time to come in and maybe liquidate one fund or another, to cover you for the next year of your slide to the crematorium. All right. Mary Funds. Yeah, funny words. Might get into HOD below $5. Okay, fine. Hopefully. Right now, I think oil's fine for the moment. So we'll see what happens. All right. Emrit says, what do you think of ZRE? I have held it for over a year. It has been sitting stagnant, but the dividends at least have been decent. Not sure if I should decrease my position or move to something else. I haven't looked at, that's one of those BMO ones. I haven't looked at it in a while. Let's take a look here. ZRE. Here we are. So yeah, BMO equal weight REITs. All right. Well, that explains why it hasn't moved a lot. REITs have been disappointing. They have been disappointing. I will put this out there. Yeah, so look at, this is just the last year. You can sort of see REITs were heading down, and that's normal because, and let me just see, where am I at? Actually, nope. I'm gonna go to the 3-year for a moment because that's not indicative of what I wanted. So yeah, right here is the point. So this movement here going down here, that was all because of aggressive rate hikes. So aggressive rate hikes, REITs don't like them. They tend to do really poorly during aggressive rate hiking. Then we got the first cuts, and REITs absolutely exploded. This is this big thing up here. And then we got, for REITs, I'd call it a black swan event, the crackdown on immigration. It freed up a lot more houses, helped start lowering rents, things like that. And yeah, we had a little bit of a crash because of that. But things have been slowly working their way back up. And here's Liberation Day. You can see where Donald took an axe to the world with his tariffs right there. Yeah, we've been slowly working our way back up. I think that's going to continue for REITs. I still think it's a strong year for REITs. I think what we need, especially in Canada, is a bit more clarity on the tariffs. And we're starting to get that. We're starting to see some progress, at least recently, or at least they're at least making it look like progress. But if that continues, and if we do get some kind of a progress and maybe a little bit of some relief on some of the sector-specific tariffs, that will help this continue. So I think there's a lot of people sitting on the sidelines waiting to see what happens. So would you get out of ZRE? I still think I think it's still going to go up a bit. And plus you are getting, like, you know, what is it, a 4.874%. Now I'm sitting in this in the challenge. I'm actually sitting in RMAX. So let's pull up RMAX for, I haven't pulled up RMAX in forever, guys. RMAX. Where are you? There you are. All right, so this is the Hamilton's REIT Yield Maximizer. All right, it's not very old. Actually, I'll pull up the 3-year just so you can sort of see. So this is RMAX. Now, it released right at the perfect time at the beginning of the rate cuts. And it exploded. And then, well, the immigration tightened down. You sort of see the same idea. And it's moving in the same kind of way. It's slowly starting to creep up. I've not abandoned. I actually did some buying down in here because, you know, I know it's going to do better. But now with this one here, it actually has a much higher yield. It's almost 10%, 9.79. Might as well say 9.8. So it's not too shabby. It's pretty reliable. I think it's going to be a strong contender for sure. So I like it. The other thing I like about this one too is you get some diversification because it's 50% US REITs and 50% Canadian REITs. So you're getting a little bit of extra diversification there. So I do like that, and I'm still holding on. I have no intention right now of selling or getting out of RMAX. I also have, and I'm going to pull this up here because, you know, I remember people were giving Timber Creek Financial a little bit of giving it kind of a little bit of a hard time. But, you know, since coming out of this, they've been recovering nicely. So you notice they went down to like 6, but they're back up at the 7.75. So, and I'm going to go back to the 5-year. Will they get back to $9? I think they will. But I don't think it's happening this year. By the end of 2026, I would not be surprised. So this is another one that I'm holding. Now, if I ever did decide to sell, and there's no, like I said, there's no real intention to sell, but if I did, I probably would just move this money into RMAX. So, you know, just to put it there. All right, now let's just quickly back here and see what Nvidia is doing. Yeah, they're still in the dumps. You see, this show gets so much more fun when Nvidia's on the upside, because then the excitement all comes out. I love it. You can actually invest in crematoriums, I hear. I'm pretty sure you can. And you know what? Not a bad thing. Not a bad thing to invest in. A lot of people don't get buried anymore. Crematoriums are kind of like the hot place for death. Oh boy, that wasn't that a sentence. But as boomers start, and I don't want to say this insensitively, but as boomers start dying, death services are going to be making a lot of money. Funeral homes, crematoriums, a lot of times funeral homes will have a crematorium. You know, end of life casket makers, all of that fun stuff. There's a lot of opportunity there. If you're okay with it, like some people might morally sort of say, I don't want to invest in anything to do with death. I don't want to be associated with it. And perfectly fine. That's perfectly fine. You can still take advantage of the baby boomers retiring and getting older by investing in things that are not death per se, like long-term care homes, extended care, SIA, a whole bunch of those, because they are going to be busy. They are going to be very busy, and they're not going to have a shortage of clients. That's for sure. All right, Amrit says, how do split shares work? I see Cowboy mentioned it above. The good old split cores. In a nutshell, basically, a company will create two sets. Basically, one of them is your preferred share. I think it's like Class A, and then a preferred share. The way they work is that they kind of split the way the dividends work, so that one of them basically gets most of the dividends, the other doesn't. The other one kind of gets the growth. So as a result, that one that gets all the dividends, it can sometimes have pretty big yields. In fact, during the pandemic, before all these covered call ETFs came out, they were kind of one of the big plays if you were looking for dividends. But they do have an interesting function. I'm not going to get too much deeper into it because quite literally it would take a while. And plus it can be a little aspirin sandwich like. But as I said, I am overdue with a split core video, and I will put a little tutorial at the beginning of that video just to explain how split cores work, all of the fun stuff, and try to make it as easy to understand as possible. ETH cycles like Bitcoin. Okay. The way when you look at crypto, so Bitcoin tends to be, they're almost like the tide. So when Bitcoin comes in, everything rises with it. So you do have cycles. So for example, the big cycle with Bitcoin is you will have your normal Bitcoin, and there's actually like accumulation phases, a bunch of different phases for Bitcoin, but we're going to keep it simple. Basically, think of it almost as like a bear bull market, but the bear market with crypto is called crypto winter. So, I guess maybe we call it winter and summer, but yeah. So Bitcoin goes through a long summer, and then it will normally go into a winter, and the price goes down. Now in the past, the price has gone down big time. So the last crypto winter happened right around November of 2001. And the way that went is that it was sitting, low 60,000s, like maybe 61, 62,000. And it went down big time and fast. And it made it all the way down to, the bottom technically, not technically, but the bottom was around 20,000, but it did wick down to about 18,000 once. So it dropped, quite a bit. But when that happened the last time, we didn't have, the volatility was much higher than it is now. The liquidity, I'm not going to go into liquidity so much, but I just want to say institutional investors. So we didn't have all of the liquidity from institutional investors that we have now. So when we go into winter the next time, so we're not gonna lose 2/3 of our value. I can't see that happening. I can't guarantee it won't happen, but I think the odds of it happening are very, very, very slim. So I think if we make it to, and I think there's still one more pump for Bitcoin before we go into a winter. If we make it to 150, so we've almost hit. I think we made it up to 126 once already. But if we make it to that 150, and then let's say we go fairly soon after that, we go into crypto winter. I think at that point we might be looking at 100,000, 90,000, maybe 80,000 at the maximum as being that bottom. So I don't see it going much below that. It's there's just so much institutional money in there right now. And a lot of that is also from a lot of that is from all of the management companies for all of the spot Bitcoin ETFs. They have bought a lot of it. So, between that, the halvening, the fact that a lot of exchanges have reported shortages of Bitcoin on their servers. Yeah, Bitcoin I think is safe. I think it's pretty safe. All right. Trump made casinos go bankrupt. That's a real business leader. Yeah, I know. Let's see. I just watched a video where Las Vegas is now empty. Yes, all of the Canadians are not there. I'm late. Did I miss the announcement? Yeah, well, right now, Samino. So right now, yeah, investors are sort of reacting to the announcement. So right now we're sitting at 176 in the after hours. So it is down about, well, that's about what? Almost, yeah, about roughly $5. Now, I do have the data. So on earnings, they were estimated to come in at, well, $1.08 and 0.8 cents. So basically, we'll just say $1.01. We'll round it up. They came in at $1.05, so they did beat expectations by 4.12%. On revenue, they were estimated to come in at 46.05 billion. They came in at 46.74 billion. So they did beat on revenue as well, by 1.51%. Now, part of why we're down is the investors, they thought it should be higher. They thought they should have beat expectations by bigger numbers than they did. So we're sort of seeing that effect. Now, the good news is, though, we still don't know everything that's come out in their, in their forward guidance. That could certainly help swing this bar one way or the other. But the other good news is that because they're still doing okay, it means that if you put a play on this, and I put a play on it, they're going to rebound faster. They're going to rebound faster than if they had missed expectations. Let's just say that. So I anticipate I'll be back in the green. I'll be able to cash out of my swing probably less than a week. Less than a week, I think. Might even just be, maybe even by the end of Friday, I might be able to. We'll find out. We'll find out. Let's see. Jay says, if COVID didn't happen, I probably never got me into investing. Carbon tax rebates and government income supplements snowballed to 30K, the power of compounding. Yeah, I think COVID absolutely got a lot of people into a lot of things, including investing. I think a lot of people discovered investing during lockdowns. It's like, I got nothing to do. And then maybe you're just bored on the internet and you see an investing video that just happened to creak into your feed. Next thing you know, you're watching it and you're finding out, oh, I can make money. I got all this extra money that the government gave me. Let's buy some Bitcoin or let's do some investing. Let's see what we can do with it. So yeah, I think so. I think they did really big. I think that was really good. P7 says, if I want to yell bingo, but P is not a bingo number. I don't know why. Maybe a plinko? No, that's a Price is Right thing. Yeah, all right. I got nothing. Let's see. If I invested in growth stocks, I would be up 300%. I am down 5% with dividend stocks. Okay, yeah. That's interesting that you're down 5% because, that is interesting. I'm surprised that you're down 5% right now. Especially with most markets being up around all-time highs, that is, it makes me wonder what you're investing in. But, growth stocks right now, if you've been, and also I don't know what the time frame on that is either, so I want to put that out there. But yeah, let's say you started investing a year ago, if you invested in growth stocks, you'd be doing great. You'd be doing great. Better than anything that you're going to get with dividend stocks for sure. So kind of, that'd be a thing. And we've talked about it, the whole idea that, total return in growth stocks will absolutely beat all of the covered call stuff, in strong markets, in strong bull markets, which is what we've been experiencing. Now, once we start sliding into a bear market, the rules do change during that time. But yeah, long-term investing And this is the thing: if you're long-term investing, unless you need the income, you are better off with, with growth, with stocks that have solid growth. Absolutely. No ands, ifs, or buts about it. Let's see. CC says. Actually, before I read this, yeah, it's a long one. I'm gonna take a sip here. Very good. Vegas mayor had an entire press conference devoted to nicely begging for businesses to rethink their increasing prices and tourists to visit, and then again in 6 months. Yeah. Yeah. Well, I mean, keep in mind, I don't know what percentage of Canadians go to Vegas, but there's a good percentage of those Canadians who are no longer going to Vegas. So, that's just the way it is. Jim says BTCY is good, but it moves a lot, and I've watched it swing 8% or more in a day. Yeah, I've actually back when I day traded a lot. BTCY was definitely a very fun one for that because I loved capitalizing in some of the movement on it for sure. ZRE gives 9 cents a share. Nice. Capital Power is approaching a dip buy for investors. Is it? Let me take a look here. Good old Capital Power, CPX. Here we go. Oh, I'm seeing some movement down. Look at that. Let's back out here to their 3-year. Okay, so yeah, looking at it from the 3-year, they may have more to go. If I was thinking about where I would look at if I wanted to get in right now, because maybe they're not going to go down as far, but you never know, because you got a high and then you got a lower high. Maybe we get some movement on the downside, but Capital Power, I have a feeling though that they're not going to. I would almost say, you notice in here we get a little bit of resistance in here, right here around $53. I would say that if they started going under $53 and you were looking for this to be a play, that might be a good place to start dollar cost averaging for sure. All right. Samico, I'm interested in buying 1,000 shares of ULTY. Should I put it into the TFSA or RRSP? All right. So ULTY, let's pull this up. This is a Yield Max fund. And I actually do want to do a deep dive on it because I get asked a lot about it. I get asked a lot. All right. So here's one of the things I will say right away. So let's take a look here. You got a 10 cents USD distribution every month. And, or no, I think this one, it's more than, is this a weekly one? I don't remember. I don't remember. It's either weekly or bi-weekly. I know it's pretty often. Now, look at that yield, 145.519%. It's a crazy yield. You know what? I want to know how often the distributions are, so why don't we just look at them? We'll head over here to key data, and let's take a look here. August 29th, August. Okay, this is looking weekly. Yeah, weekly. All right, so this one pays out weekly. Fantastic. All right. So with that being said, the question is TFSA or RRSP. 1,000,000,000% no to putting it in your TFSA because your TFSA is not recognized as a registered account by the IRS. So they will take 15% of that dividend. So 15% of that dividend, they'll take it and you can't get it back. It's gone. It's absolutely gone. So it's basically throwing away some of your dividend right off the top. Now, the RRSP, and that is the place for U.S. dividends. So with the RRSP, it is recognized, so you'll get that entire dividend. But mind you, on the flip side of that, when you do eventually pull that money out of your RRSP, the entire thing will be taxable because that's how the RRSP works. But you'll also get that tax break when, if you put that money into your TF and your RRSP, you can use that for current taxes. So you can, it all works out. It all works out in the end, or at least it's supposed to. So yeah. If you're looking at a U.S. dividend that pays a big dividend, you're going to lose 15% of it in your TFSA. You won't lose any of it in your RRSP. It's just, that's how it goes. All right. Jersky says, I find it easier for me to buy cover call ETFs versus growth stocks because if you ever buy a growth stock on the wrong day, it takes a while to bounce back. Okay, fair enough. Yeah, and sometimes, and I will tell you something, in a bear market, when you are holding some of them nice, those stocks with nice dividends, including covered calls, it's nice to see that income coming in. It sort of helps break the monotony of looking at red day after red day after red day. It's nice to see a little bit of money popping up for sure. Jack says 250 plus Goog by the end of the year. Let's take a look. Let's take a look here and see. All right. Now I like Google a lot. I mean, being a YouTuber, they're the ones who pay me. They pay me. Now let's come over here and I'm just gonna pull up the 3-year. So yeah, look at this. I mean, Google's been doing great. I think I'm in the CDR. I do not want to be in the CDR. Whoops. I want to be in the US one. Here we go. All right. This is better. This is better. Alphabet. All right. Let's pull up the year. So once again, they've been doing good. I mean, they were sitting right now at 208, and you're thinking about 250 by the end of the year. It depends. If the market can keep being crazy like it's been the rest of this year, maybe. Let's even go out to 3 years here. If you're sort of looking at the slope that we have with the amount of time frame, I would say 240 is more reasonable. I think or maybe 240 by the end of the year. But you know what? Let's not just take my word for it. I'm gonna jump over here to Yahoo. Let's see what the analysts think. I'm kind of curious to know what they're thinking. Now, they won't give us to the end of the year. They'll give us a 1-year projection. All right, here we go. So they're thinking, oh, look at this. They're actually being very negative. They're thinking $217.19. Now, mind you, that is still a little bit higher than right now. So right now they're at what, 208? Yeah, that's a little. They're expecting some growth. They're not expecting a ton of growth. So I think it could get to maybe 240, but I think it will beat them. I think it will be somewhere between 220 and 240. Let's go with that. All right, let's see. CC, Nvidia not including H20 China chips in guidance. Too funny and shady. Oh, interesting. Is WNTR ETF good? I've never looked at that one before. Let's take a look. This is a new one for me. WNTR. So, oh, it's a Yield Max one. Okay. Let's take a look. So yeah, Yield Max has come out with a whole bunch of new ones. The last time I looked at Yield Max, they pretty much just had all of their synthetic covered call ones, but they are coming out. So this is short option income. Oh boy. So yeah, this one to me tells me right away from the title that they're shorting a strategy. So basically, meaning that if strategy goes down, you're gonna make money. Is it good? Well, if strategy is doing bad, and if Bitcoin's doing bad, yeah, sure, it could be. I think it's risky. I'm one of these people, I don't like to bet against companies per se. But, well, with that being said, I mean, I have played inverse ETFs on things like oil and exchanges before, but not often. A lot of times, if I am going to make plays with inverse, if I'm going to be playing around with them, a lot of times I will wait for I'll wait for the positive. I'd prefer to play the bull over the bear, but I think risk is in their defense. So Consider it risky. Could it be good? Sure. But is it risky as all heck? Yeah, absolutely. All right. We already answered that, CC. Does ETH have cycles like Bitcoin? Yeah, I mean, I guess I think we went off on a tangent, didn't we? So in a nutshell with Bitcoin, and we talked a bit about the crypto winters, normally what happens cycle-wise is you got Bitcoin will run. At the end of Bitcoin running, then normally ETH runs. And that kind of has me concerned because ETH has recently been running. And I'm like, could Bitcoin already be done? I hope not. I still no, I think we still have more room. Then after ETH, then it usually moves to the altcoins. And the altcoins have their little run. But yeah, it tends to follow. Think of it as this way. It tends to follow Bitcoin, but it tends to be slightly back. But now that we have a lot more less volatility, now that we have a lot more institutional in there, and ETH also has the spot ETH ETFs in the US, so we'll have to see how that's all going to roll out. It could be very interesting this time around. Reverend Ramirez, welcome back. I was hoping Air Canada would have dropped more to try out a swing trade. C'est la vie. I know. It's like even the strike didn't pull them down. I was surprised. I really thought we were going to get a good entry in there. It might even be a situation where we have to revise it to instead of under 18, maybe under 19 is the time to get in with Air Canada at this point. Let's see. CPX has been good for me. We'll look at buying more. Picked it up on Liberation Day. One thing Trump was good for was causing panic sales. Yeah. I'm sure he will have some more. So guys, I am going to skip comments to other people, and we'll jump ahead here. What's your view on the whole Constellation software panic in recent times about AI supposedly disrupting them? Multiples have been high for years, so the stock is sensitive, but seems overblown. I haven't looked very much into that. I will say that right away. I think that Constellation software can I think they can weather quite a bit, but AI does have that potential to disrupt a lot. So I would watch things. I think what we could potentially see is if we did see a little bit of a retracement in Constellation, it might actually open up some buying opportunities because I think that they're strong. I think they have quite the moat. I think any kind of disruption that AI comes with, they're going to find a workaround. So I think right now it's more panic than actual, but it's definitely worth paying attention to for sure. And I need to pay more attention to it because that's all I got. But yeah, let's see. Nvidia Jensen surprisingly said that unless China 15% tax agreement applies to all competitors as well, litigation may occur. Lots of negative shade across the Nvidia earnings media now. Oh boy. I'm almost afraid to go back and look, but let's do it. That's actually it's not as bad. It's still at 177. Okay. How long is a how long is a winter in crypto? Well, it's variable. So the last one, it began like around November of 2021. So 2021. And it probably, to get to the bottom, it was at the bottom in about, 6 months? Within 6 months, it was at the bottom. And it slowly kind of went flat for a bit. So the fall was fast and quick. Then we sort of stayed there in the deep freeze for a little bit. Then it slowly started climbing. And so I would say in total, I would say about a year. Or maybe not even quite a year. Maybe closer to 10 months, I think we were in that. And then at that point, all the people who bought, like anybody who bought in at $20, at 20,000, they were in profit pretty quick, and they stayed in profit for a long time. And they're right now laughing. They're laughing about it. They made so much money. Let's see here. Oh my God, I caught up. I love it. Amrit, curious to see how strategy will be when Bitcoin hits that drop. Well, Strategy has probably more Bitcoin on their balance sheet than any other company in the world. So if Bitcoin drops, so too will Strategy. Now, keep in mind, Strategy is also they have borrowed a lot of money to buy more Bitcoin. Now, Bitcoin would have to seriously drop, and they're not going to drop to that point to put Strategy into any kind of peril where margins get called and things like that. I don't know what their adjusted cost base is on their Bitcoin right now, but I believe it's probably below where it's going to bottom out at the next winter. So they're fine. Let's see. What swings are you currently looking at possible for a decent play? So, well, as I mentioned, I got the Nvidia swing, which isn't going well at this moment. But like I said, I'm ready to bail. I always have the Air Canada in the back of my head. So, but we need Air Canada to drop a little bit. So there is that. I'm probably gonna look. I'll probably look a bit tomorrow morning just to see if there's anything there. Like right now, what I'm looking for, and I'll show you. I will typically. So if I'm doing a Canadian trade, I like to come in here and take a look and see what's going on. So first thing I'm going to do is I'm going to look at things. I see this here. Like look at Dollarama. They're down 4.36. Oh, this one here. What is this? I don't know what this is. Let's see what this is. Oh, Topicus. So Topicus is down. Now, this sort of goes back to the whole Constellation software because this here is they're a spin-off from it. Now, so for that reason, it's like there might be more room to fall. So this might not be the best solution. But Dollarama. So Dollarama had a little bit of a fall here. I have a lot of faith in Dollarama. Now, mind you, they're pretty expensive. Because here's that thing. If I buy, let's say I buy $20,000 worth of Dollarama. At this, I won't get as many shares as if I bought 20,000 of something smaller. I'm not saying I'm going to even thinking about buying 20,000. I'm just using that as an example. So sometimes with a trade, it kind of makes sense to pick something a little bit smaller. One of the reasons, so for this Nvidia, I didn't buy Nvidia directly. I'm using a CDR for it. The reason I'm using that. CDR is a lower price. I can get more shares for the buck. So, that's kind of that thing. Now, National Bank, still a little high, but I think they're going to bounce back from this. So National Bank is something that I could potentially look at. I actually thought about making a share with their earnings because I thought they were going to go up. I thought they were going to go up a little bit here, and they didn't. They went down instead. So that might be one to do. So from here, for example, like when Empire, when they had their earnings, I jumped on them because they went down big time, and I was like, yeah, they're going to just rebound back up. They have good fundamentals. They're coming up. I jumped on them, and I made a profit. So that's kind of the way I kind of look at things. All right, so basically, winter will be good while winter is on for a few months. All right, and let's see here. Picked HHIC, and so far it's doing great. I will add a big amount once I trim MSTE down the road and give it, yeah. You see, here's the thing. I want to add that to the challenge. Typically, when these funds release, they have a nice big spike at the beginning and then they fall. The fall hasn't happened yet. So I'm hopeful that we'll get the fall soon and I can get in at that point. But yeah, we're running out of month. I mean, I may be carrying over a little bit of cash into next month because, right now everything's at a high and I don't see anything I want to buy right now at this moment. So yeah, no worries. I got it. Are you still holding ENS? So speaking of split shares, ENS, that's an Enbridge share. So basically, all they hold is Enbridge, and then they split it up into a split core situation. I'm not currently holding ENS. I've held them in the past. They were one of my go-to income funds. Well, let me show you guys. Oh, right over here, ENS. Here we go. ENS, E-split core. So yeah, they hold, like I said, they hold basically Enbridge. That's it. All right, I'll pull up the 3-year on it. So yeah, back in here, and this is where I was big time into them. Like this is when I was, they were one of my high income stocks because at that point, they were one of the few that you could get, which had a yield up in the 10% area. So right now they're sitting at 10.442%. They've also, their dividend's been pretty reliable. So some split cores will occasionally suspend their dividend. Not so much, as far as I know, I think ENS in maybe the last 5 years might have done it once, but for the most part, they've been pretty reliable. So I do like them, but I'll tell you, there's now a high shares that that does Enbridge. So that's another option as well. I kind of look at it that way, but I am going to, like I said, it's on my short-term radar to get another split core video done because it's time to look at them again. Look at all the ex-div dates on the CC ETFs. Might get a sale, a small one. Yeah, that's kind of that thing, and I don't know yet. Let me take a look here. HHIC. All right. I'm pretty sure they have declared their first dividend. So here we go. Ex-dividend date 9/29. Probably means we've already missed one right now, but yeah, 9/29. At the end of I'm hoping we get a little bit of a retraction after that. Well, keep in mind too, if the current ex-dividend date, and that seems like a long time away for the first one. Let me just double check and see if there's another one in there. Yeah, there we go. Key data. Oh no, that is. Oh, interesting. Yeah, no, that is the first one. So yeah, September 29th is their first ex-div, and then they're going to pay out on October 9th. So that would be October. Well, even though it says October 9th, you will always see it usually a day later, depending on your broker. But most brokers will pay it out to you the next day. All right, Claude says hi. Maybe Topicus for a swing trade. I know. I was looking at Topicus. It's a possibility. It's a possibility. I'll have to look a little bit harder, but I do want to take a look at that whole AI thing and see if there's any real water to it before I jump in on that. All right. CLSA is the safest split share ETF. Yeah, I like it. I like it. They've gone up since I bought them, and the div is no longer 12%. Well, yeah, because when they go up, that dividend yield starts pulling down. Yeah, CLSA. So that one there, what I like about this, and that's a Brompton fund. So let me pull it up here. CLSA. Here we go. So Brompton split core. Come on, guys. There we go. And bring up the year. It hasn't been around very long. But yeah, you see, there's that movement I talked about that I've been hoping for. So, yeah, so we got that little movement there. But yeah, it's since that movement, they've done fantastic. So yeah, they've gone up to 11.77. I mean, they launched right around $10, so not too shabby. And they have. Right now, their dividend, 10.769%. That's fantastic. So yeah, no, this is definitely, the nice thing is that because they're holding a basket of split cores, if one or two of them suspend dividends, it's not a big issue. The others kind of make up for it. So that's why, yeah, this is a much safer, more reliable way to go. 100%, Brian, 100%. HYLD is Friday ex-dividend, yes. So why is the Loblaw stock falling? You invest? Let's take a look. I haven't looked at Loblaws. I did a deep dive recently on them. All right. So let's see here. Eek. All right. Now they should. Let's see here. Okay. Yeah. So they didn't fall per se. Well, that's 3 years. Let's go to 1 year. All right. So yeah, you got a little bit of a fall here, right? Yeah, I see what you're talking about. They had. I think it's already happened, hasn't it? Is there 4-1? But I could be wrong. But I think it already happened. So they recently did a split share. Sorry, yeah. Did a split stock. Sometimes you will get a bit of a retracement after that. But yeah, I think this is a good stock. I like Loblaws. I think they're going to rebound pretty well from this. One of the big reasons that they did split their shares is that it makes it more affordable for people to get in. More investors can jump in. Yeah. So yeah, it was kind of weird. I first looking at the 55, I'm like, what? Weren't they much higher? And then I'm like, oh yeah, right. This is the split share. The stock split. There we go. Got to get my heads out of split share to talk about it. But yeah, sometimes you will also get a little bit of retracement. I think right now at 55, I think that's a good place I think that's a good price. This one, if this falls a little bit lower, they might be a good split. They might be a good swing trade thing. So I'll keep my eyes on that. Is there a Dollarama CDR? No. So CDRs, CDR stands for Certificate of Depository Receipt. These are investment vehicles to buy foreign stocks. So Dollarama is, well, they're Canadian. Now you could argue and say, well, they're listed on the NYSE, so why can't I? Are they listed on the NYSE? I think they are, but now I'm kind of questioning whether or not they are. But no, you can't buy a CDR in a Canadian company. As an investor with zero trading experience who wants to give swing trading a real try, chronically ill lots of time, what you recommend in terms of a learning resource? Okay. The big thing is, if you're starting with swing trading, I will tell you 100% start small and don't swing trade stocks that are penny stocks. So don't swing trade little stocks. You don't have to go for the big stocks, but go for stocks that do have some good fundamentals, because the whole thing is, when you swing trade, there's going to be one or two options that come out of it. You got a couple of options. You're making a bet that it's going to go up. Great. It might go up. That's one option. You take your profits. Yay, you made some money. Another option, it might just stay flat. And then at that point, you kind of got that thing like, well, okay, it didn't really go up. Do I want to continue the swing trade, or do I want to get out? So you can cut your losses and take a minuscule amount up or down. That's another option. Third option is if the trade goes horribly wrong and it goes down. Well, if you have good fundamentals in that stock, it's going to return. So you got a couple of options. One, you can sort of have a plan to say, okay, if it goes below X amount of dollars or X value, I'm just going to sell, I'll take my losses and move to my next swing trade. And sometimes that may be the only option you have. And the reason it is that, you may not be able to tie up all your money. You may need it for another trade. Otherwise, you could be dead in the water. So it's one of the reasons, like if you have, let's say, we're going to say $100. We're just saying $100 because it's easy. It could be $100,000, but it doesn't matter. You got 100 of some amount of dollars. Well, you don't want to put 100% of that into a single trade, because if it does go down and you're kind of at that point where I can't take that loss, so you kind of have to wait for it to rebound. Let's say it takes a month. Well, there's a month where you can't trade. So what a lot of swing traders will do is say, okay, well, I know how much I have. I have to have a limit to how much I can trade. So you might say, I can only, at the most, I can do is 10% on any one trade. So that way there, if that one does go bad, it's only 10%. So you still got the other 90% to play with on other trades. And then you can, once that one does rebound, you can then either sell it out once it gets back to the green, or you could let it, if it's on a ride up, you might as well let it go a bit and, you know, take some profits at the same time. So yeah, it's fun. It's fun, but it happens. I mean, it's just one of those things where you kind of want to, like I said, start slow, find some things, and quite honestly, this stock, this is a good place. This is a good place to go because you can look, and normally the stocks that show up here have better fundamentals, and you can sort of identify quickly which ones. And you know what? Here, let me do this. If you want, I'm going to drop this right here into chat. It's a big ass link, guys, but it'll take you to that heat map. So yeah, if you want to go to that heat map and you want to copy, you know, that's where I would use it. And here's the beautiful thing, guys. When you're in here, like, you can be like saying, okay, well, you know what? I want to make a move, but you know, I don't know if I like these stocks. Maybe I want something in energy. So you can click on energy, and it will bring up energy, and you can, you know, see a little bit more here. You can also zoom in if you want to see some of these smaller ones to sort of look and say, okay, who's doing bad in energy right now? Because energy's doing good. They should be doing good. Oh, look at this one. OYL. CGX Energy. Okay. But look at the price. Do you remember my rule? No penny stocks. This is a penny stock. So right away, nope, penny stock. Not gonna do it. Not gonna do it. You know, and a lot of times too, if it's a company, like if you have never heard of the name before, and you're like, I've never heard of this company before, don't touch them. Don't even look at them. You know, like I would say, pick a company like Pine Cliff. Yeah, I've heard of Pine Cliff. You know, but they are a penny stock, which is kind of interesting. They used to be a little bit higher, but you know, that's a thing. And sort of go through it. All right, let's try to get through a few of these comments. The other, well, let me go here. The other thing too is if you want more help, William, there's a couple more options. Check out our Discord. You can always put questions there, and either myself or the community will give you a bunch of feedback. You know, if you want individual help, you can always email me, admin@mountainfinance.ca. I do offer coaching if you need it. You can get most of that from me right here in chat because I will answer any question. But if you want something more personalized, that's an option as well. Anyway, Amrit says, been looking at CN Rail, but the price is still high for me to enter. I wonder if there is a CDR. No CDR. Once again, Canadian company. And what happened? So yeah, I'm pretty sure it happened. I can't even remember what the price was before. No, it was about 200 and something. So yeah, no, it happened. It happened. We got a little bit of a trace down, but I'm not worried about it. I'm really not. I still like. Actually, I think one of the family members watched that video and bought a bunch of Loblaws. So, and I'm like, just hold it; it'll be fine. I would like it if the railroads do a 2-to-1 and then increase div over time. I'd love to see it. I'd love to see a split. I'd love to see even a 3-to-1, a 3 or 4-to-1 split. That would be fantastic. Crash National and crappy Pacific. There we go. In the 1990s, buying the Dogs of Dow was all the rage. Would it work with high income ETFs? I don't know. Let's see. CN Rail I have been looking at, but it's going to climb. Just the share price is pretty high. So debating. All right. Rory says, I shouldn't talk down the rolls or the rails like that. A lot of the plastics between trailmen and the politics, right? Good industry to own, though. It is. It's absolutely a great industry to own. Backbone of the Canadian supply chain. William says, thanks for the answer, retrading. I guess my question is more so about actually learning technical analysis / fundamental analysis, not to copy a strategy, but to learn. I used leverage ETFs, by the way. Okay, all right, fair enough. Come back on the weekend and, ask me more questions. I do have a show on Sunday live. Ask me more questions, and we can certainly go into talking a little bit about technical analysis for sure. Let's see. Thanks for mentioning the Discord. We'll join. Ignore the other questions. Not so much time is taken up by me. Haha, I'll ask away in the Discord ahead. Ask away. Ask away. And guys, Kevin Kaz in with the $5.49 super sticker. That means we have a goat. We have a goat on the play. Love it. All right, guys, if you got your last minute questions, get them in now. These don't go 2 hours. These are normally an hour and a half. So we're already well over time. So quite literally, if you got a question, get it in fast because we're pretty darn close here. We're pretty darn close to the end. I am going to take one more gander over here at Nvidia. And it looks like, right, yeah, 177.33. We'll see what they do in the morning. It should be fun. All right, so coming up this week on Friday, we have, the video, actually, channel members can watch it tomorrow, but we are looking at a hybrid portfolio. So it's going to have some growth stocks, growth ETFs in there, and it's also going to have a lot of income in it too. It's kind of got a little bit of something for everybody. It's going to be fantastic. I'm excited. I'm filming it in the morning. I want to film it right now. After I eat supper, but I won't. I'll film it in the morning. It's great. All right. Here we go. Here's our last minute question. Stretchy says, "What's your thoughts on Dollarama? Been trying to enter, but the price just seems a little high. I see it went down quite a bit today." Yeah. So Dollarama, I'm actually surprised because Dollarama's been, their earnings, they've been doing really well. So with their moves into Australia, they're actually already starting to generate a lot more income because of that. So I was actually a little surprised to see Dollarama go down. I was thinking that they might go up a bit, but no worries. They're a solid company. They're gonna be fine. Dollarama will be absolutely fine. If anything, this is just creating more of a buying opportunity. So yeah, they are expensive. Let's just address that as well. They're another company I would love to see them do a split. A 3-to-1, maybe 2-to-1. That would be fantastic. So yeah, I still love Dollarama. I think I did a deep dive on them not that long ago as well. So if you just do a search on the channel for Dollarama, those going to be, I've done them a few times. When is the 0 to 100 coming out? So yeah, normally it's the first video of the month, but this week coming up, it's going to be the second video of the month because we got our bank review coming out first. I want to get that right done. So yeah, you'll see the 0 to 100K next Friday. The bank review will be this coming Tuesday. And guys, we will be back here. We will be back here on Sunday. For this week, it should be a fantastic show. We've been hitting on all cylinders on the weekend, so I can't wait. It's going to be great. All right, guys. Until then, enjoy the rest of your day, and we'll see you all. We'll see you all on Sunday. Take care, everyone. Oh, wait a minute. I gotta be big screen. I don't know why, but I do. All right, everyone. Take care. We'll see you guys on Sunday. Good night. Bye-bye. Whoops. Bye-bye.